just go through the whole thing real quick, just so you know exactly what happened. Why not? This is where, I first noticed something in the morning with Wyckoff. So we started off, and it made the same kind of move off the green zone and red zone that we saw in the morning. That was the last time that it responded to a green zone and red zone. It made this Wyckoff. So we could see that we got to this point in the pattern very easily. A shape that you see is very similar to phase A. I mean, that's all that I said about it. But I just want everyone to understand that's how it all began. I started thinking about it at that point. And, even though it was using the Wyckoff, it still was using Fibonacci's. Like today, the 188 at the bottom that Randy was mentioning, that's the same kind of idea, that there was a 188 at the bottom of this one. And I'm like, okay, that's cool. And it went up off of that 188. It broke out quite well. I like to recognize it. This is where we really get into phase A on that original Wyckoff. We start looking at it again. When the market does pause, it seems to be interested in phase A, which I'm like, geez, I was talking about it today. When the market pauses in the bigger picture, it does a Wyckoff to go sideways. I'm like, well, here, when it goes sideways, it was doing phase A specifically, and just phase A. So that turned into phase A not working first, and then the more that it did it, the more of the Wyckoff we would see. So it was basically like this. We started off with a big dump, it came down, made phase A, made another big dump, made phase A, and actually did the Wyckoff. So these people didn't really get it first. All they got was A, and these people got the rest of the Wyckoff. Now, in my schematic, or in this picture right here, we get to see this, the second phase A that we've tried. This is the second time that we've tried it on Friday, for perspective. The second time. Okay. And we're noticing that, hey, when the market does pause, when there is a slight pause, when like it's either falling like a freaking like a rock, right? Or it's making phase A. And that's all we've got that day so far. That's the only information that we have on the Wyckoff. So that leads me to post right after this that, of course, phase A has been all that it has been able to complete out of the entire Wyckoff. It's an interesting fact. And that was where we were on that triangle. I was like, okay, this is the triangle I think we'll have over the weekend. Big purple triangle. So what I'll do is I'll move that up here. And then came this next picture, which was just a picture of it doing this. So we could see the Fibonacci relating to the Wyckoff. So I marked out PS, AR, SC, and ST, just like we have down here. And then I put a schematic next to it. We could see that in the schematic, we ran up from the ST. It was like that, up from the ST. That's where we were with it at that time. And that was working fine. Oh, and what did I say about that? I said, hey, so the moves we have seen in the morning haven't made it this far in the Wyckoff ever. A sign of change for sure. That's what I said. So phase A, being able to complete more than just the average phase A that we were being able to do that day was a big change to me. I was looking at that. And so after we managed to continue to that point, so we fell from that high right there, and I circled where we were, the ST in phase B. There's a 100 point to get to the B point above the Wyckoff, just for some perspective. And I mean, today, I don't think it's 100 points, but 128, 178 to get all the way up to those B points. So now it's interesting because this is where we are right now in the Wyckoff. That's why I'm explaining it. It's because we came up off of the ST in phase B. That's this. You can see that it didn't make a new low past these lows, just like we have today. And it launched up, right? That's where we were, and that's where we are. That's where we came from. And then we achieved that level right there, just for a visual example. Oh, and I also said positions taken from the lows can still be taken out if there's a spring or a spike. So I'm literally warning you about the fact that it can come down and make that spike. And, so make sure you're using stops to protect trades. If you take any responses to fibs or Wyckoff reversal levels, and I mentioned that it was bought out back to the highs without making a new low specifically. And in the schematic, it's supposed to make a new low. And I was just pointing it out that we didn't do that. Just like today. Just like today. And when we did that, that's how we made the support to the triangle I was expecting us to form on the 15 minute. That's the 15 minute again. We made B points in there as well. And there is basically some congestion to be able to put a trend on. And the next part of the Wyckoff was here. This is an update on the 1 minute, you know, and I basically, you can see in the last picture, we were right there at the high, and we came down a little bit from that high to hit a 61% retracement of the ST. So if I put those same fibs in there, is this the 61? That's the 61 that it made it to yesterday, or well, Friday. And you can see update on the 1 minute chart. You can see the turnaround at the correct spot in the Wyckoff. We have made a 61, but in the schematic, the spring can play out off the 141 fib set. So I was looking at, hey, look at these 141s at the bottom. You know, that's where we could go to next on the spring. And remember, spring only happens in one of the Wyckoffs in the schematics. It can decide to chop this area instead of the other option. I'm literally laying it out that, hey, this level could be a spike to a 141 to a new low to spring it, or it might chop it instead. So the next thing that we did was we chose to make the spring. And it is an option today. Like where we are right now is right here in this schematic. Like we just lifted off, let me increase the size of this. It's like right here, you know, where it's battling making that spring, where it did come down, where I was like, hey, you know, and remember, the spring only happens in one of the Wyckoff schematics. It can decide to chop this area instead of the other option in Wyckoff theory. We can see that it's hitting the 141 at the point in the Wyckoff that there is a spring. So I was literally saying, hey, we're at the spring. I circled the spring, and we got to the 141 in the Wyckoff, which is what we're supposed to do. And this is the next one. So you can see literally off of that 141, you know, it's interesting to me that because the 61 was placed in this Wyckoff where it was, its design was to fail to the 141. Remember that typically this pattern, we like to go back to the 61 as a target, but in the Wyckoff, we actually go up through the top of the range and get the B point above if this is textbook. There's enough on the table to secure some profit and let the rest run to the 61 and through it to the highs. And off of the spring, I mentioned, hey, you know, we're at the LPS now. Just lifting off in phase D, just after the spring. And then, this is an interesting one because it's not supposed to do this in the schematic, but I was like, it made an 88% retracement, something different. The Wyckoff would usually finish with an SOS to grind the highs, yet I've seen it try to rekindle the movement. Then the next picture, you can see that this is the same kind of trend that the Wyckoff uses to break out with, and we've just made it a little bit harder to be exposed to the part of the Wyckoff that has the highest value, the end, the run. And you can see that's where I drew in this trend here, and that same trend I drew in so you can get a perspective of, hey, this is where we are, this is the trend that we're trying to break to get the thing of most value. And then, in my opinion, seeing as how the trend is still there, it may have the same impact that it does in the Wyckoff, despite the fact that it made an 88% retracement prior to its break. This red zone is good for the SOS grind that happens in phase D. So that SOS grind that happens up there, I drew little red zones to show where the red zone is and how the trend breaks to the red zone to get us going to that sign of strength, where we grind the red zone like we're kind of doing right now. But regardless. And then we officially made it to the 61 from the 127 area. So we came up off of those lows from the very, very bottom, off of the 141 where the target is the 61. You know, we like to go back to the 61 as a target, as I mentioned in the top picture. We literally did that. We went from those 141s to that 61. That was that movement, despite the fact that we made an 88% retracement along the way. And I said, almost back at the red zone, we may find ourselves chopping the top of it before hitting the B points above to complete the Wyckoff. And then, so to complete the Wyckoff, profit taking area, keeping some for more of a run is a consideration. There's tons of B points above, but here we are. I know many of you are still on holiday, but if anyone is still trading the Wyckoff here, it worked out quite well. Setup all explained in advance. It's nice to take note of two phase A's that failed prior to one of those that worked correctly. Also take note that we made an 88% retracement prior to the beautiful phase D move through the highs and the entire consolidation. Now beware of the tests of the red zone from above. I was still reminding everyone. I updated on the 15 minute as well, where this is where we are in relation to the larger triangle I was talking about on the 15 minute. Really impressed with the Wyckoff. Hope you have an amazing holiday. For some perspective, it's 200 points to get to the B point above. I also gave an update on the other chart, which we can take a look at too, because it's really relevant in this area. We came back up to smash that green zone, and that was the end of that Wyckoff basically. Also, another thing I was reminding about was the daily chart, where we had a 188. You know, we haven't even got to it yet. So all of this upwards movement that we're seeing right now could literally just be to get to that 188, so that we could go sideways in it for like a year. So, you know, crazy. But daily chart, we're actually not at the 188 yet, as you can see. So these little pullbacks are nothing in comparison to the move we could do to 17K. You know, literally, if that 188 200 works, like if there's any kind of, you know, reason that the market would have to make a dump, like it might make the stretch all the way down to 17K, and that would be the B point. So falling from our current highs down to 17,000 in the market could be on the table in the event that we catch a movement from that level. It could be incredibly lucrative for a long time. And while everyone is freaking out about whatever news they've invented in that range, all you have to do is understand it. And then we can see the next thing that happened was that we came down to the red zone. I was like, take note that we made an 88% of the retracement. Now beware of tests of the red zone from above. We came down specifically to test that red zone. So you have to notice I'm talking about it coming down now. The Wyckoff is done. We've hit the B point. I've removed it entirely now. And then more tests of the red zone throughout the end of the day. Test of the red zone from above. And then the final post, literally this. You know, so long as you avoided the test of the red zone from above, you can benefit off of the continuation from beyond. And it made a little bit of a higher high until it died out for the weekend. End of day chart. Now beware of the tests of the red zone. And that was it. That was the end of that day. As you can see right after, that's when the next day begins. So those are the posts on that Wyckoff. It's pretty crazy how it all worked out exactly the way that it should.